Quite an exciting day, the biggest stock on the NSE. Give us an indication of what you're expecting. I mean, the share price has come under significant pressure over the past few sessions, and we know that it's basically been we've been seeing a lot of interest coming through for foreigners, from foreigners in particular.
Yes, I think it's a really interesting earnings release. Safaricom's about 18% of the total market cap of the Nairobi Stock Exchange, so you can't underplay its importance. Bear in mind, if we can take a step back, what Bharti Airtel has arrived in full force in Kenya, and we saw those results, which saw a pretty soft Africa profile. And Bharti Airtel has really gone head-to-head with Safaricom, and I think it was that head-to-head price war which brought the share price down so dramatically from 610 levels on 5th August, just before the price war broke out, to levels around 470 right now. I think the shareholders have overreacted to the price war. I think there's a huge concession in the price right now on a trailing P of 12.5. And these results actually, Eleni, will only reflect 1/3. I mean, the price war existed for 2 months of these results out of 6. So I think the market's going to have a relief rally when they see the numbers come through at 3:30.
So what you're saying is we're not going to see a significant impact coming through on the numbers because of the price war?
Absolutely. I think, you've had shareholders, because there's so many shareholders, the more than 800,000 individual shareholders in this stock at the Nairobi Stock Exchange, and really their nerves got shattered by the Airtel blitzkrieg, which I think yesterday's results will now start to turn around and put into focus whether Airtel's price strategy has any longevity anymore around it because of the duration of it. So I think it's a very interesting result. We've got to look at it in the context of the Airtel price war, and I think we're going to outperform expectations here, which are really low.
But I suppose everyone's going to be focusing on the guidance, pointing to the kind of effect that the price war and the tariff decreases are going to have on the bottom line and top line going forward. Isn't that the key element now?
Yeah. There are two elements. I think, we all know now that the voice war, where we saw prices reduced by about 50%, have not led to volume gains of material significance. I mean, there's no way that correlation is perfect, and it's far less than perfect. So as investors, we know this is a commoditized voice business. It's come under pressure, but I think the investors will be looking at the data curve. Here, Safaricom have a clear lead. M-Pesa is ubiquitous. It's everywhere. 20% of GDP is going through the M-Pesa e-float now. And I think the internet has just taken off with the cable arrivals. So I think as long as Safaricom has got a strong story to tell on that front, I think on balance, this price has practically the kitchen sink in it.
Okay, well, that's actually a very good analogy. Just taking a look at innovation, because I think that is going to be relatively key as well. I mean, you spoke about M-Pesa is going to have a big contribution to the revenue line. I mean, average revenue per user, that is also going to be under the spotlight. The question is, what else can Safaricom come up with?
Well, I think, to date, they've been a uniquely innovative company. They've had an environment which has actually fostered innovation, and you can see that. And M-Pesa is probably the preeminent example. The voice of M-Pesa is in all the furthest corners of this world. Everybody knows about it. So I think, they've got to maintain innovation, and that is all about data. Look, I think, the mobile phone business is an extraordinary business in India and Africa. It's a bet on mass intellectual capital. It's a bet that we've flattened the world, and it's a bet that eventually the value of somebody in Kenya and India will converge to some extent with the value of that person in Europe. And I think that's a great bet, and I think it's going to come off in a big way. But looking at this business now, investors will want to see, how much pressure they came under. We'll get a little bit of a look at it, and whether they are able still to show everyone a clean pair of heels on the internet and the mobile wallet and these new innovative business lines.
Well, just looking at the new CEO, Bob Collymore, a lot of people questioning as to what his next move will be. And we know under the rule of Michael Joseph, we saw an increase in subscriber base from 16,000 subscribers to 16.3 million currently. So that, of course, a massive growth curve. What will his next move be? Everyone's watching to see what he's going to do.
Absolutely, and I think I've been following his comments as closely as you have, I'm sure. And the interesting comments, which I think both Michael and Bob were talking about, was about margins being sacred, and the fact that they didn't believe this price war was sustainable. And I think what the market was just absolutely browbeaten by Airtel's very, very powerful use of voice on our continent. And I think as we drill more closely into the details, into the numbers, and it doesn't look as fierce a competitor as it did 6 weeks ago, 4 weeks ago, 2 weeks ago. And I think he's got to lay out his strategy. What's he going to grow? And I think it's evident. He's going to grow the mobile business, the mobile wallet, which is now morphing into a bank account. And that's going to be the case with the M-Kesho initiative. And he's going to talk about the internet. And you mustn't forget, we've reached a moment of maximum uptake on the mobile phone in Kenya. We've got 3 and 4 undersea cables. We've gone from being dark to having the light switched on. And they're in the front position on that. And people shouldn't forget that.
Of course, we know that Bob Collymore has been talking about expanding further on that 3G coverage, and that exactly is what you're alluding to at this point in time. Looking at the 4.5 billion shilling second bond set to be launched as well, of course, that's being the second tranche. Your views on that, because essentially it's going to be used for capex spend and, of course, just looking forward in terms of growth for the company.
Yeah, absolutely. Safaricom has got to maintain its capex. I think they came out with a figure in Johannesburg about 3 or 4 weeks ago, which was saying capex would be about $163 million US. And we know they've got to spend money, but they've got plenty of firepower. I suspect, Eleni, they're going to cut some fat because I think that there was a little bit of fat in that company, and that too will give them room at this moment in time. But they've come under pressure. I think the moment of maximum pressure has passed, and now we want to see where they're going to grow.
Aly Khan, just very quickly, you're talking about cutting out the fat. Are you talking about job losses coming to the fore? And how would the investor community respond to that if we do see some job cuts?
Well, I'm not sure that it's necessary, but I just think that the business was growing at a time when there were very, very juicy margins. They could afford to take more human capital on in the last few years. I think all I'm saying is I think there's room to take some fat off the body at some point, and I think that's what they're going to hold in reserve and tell shareholders at some point, and they'll probably get a good reaction on the share price from that.
Very quickly, Aly Khan, where do you think revenue is going to head this time round? The margins, you mentioned that briefly, and also would you be buying Safaricom at these levels?
I would be buying Safaricom at these levels. As I said, I think everything's in the price. I'd look for a pop back above 5. I think revenues are obviously going to be under pressure, but actually they're not going to be as under great pressure because it's only a 2-month window. It's a 1/3 crimp of that. But I'm looking for a number similar to what they made in the second half of last year, in the area of about 16 to 17 cents, if not a little bit higher. And I think that's going to be good enough.